Welcome back to the channel, guys. I'm your host, Buck Nang, and today we're going to talk about rebalancing the portfolio, specifically this portfolio, because we're finding a lot of, I'm finding a lot of, it's really just heavy weighted on one side. And so we're just going to spend the rest of the year on rebalancing. So there has been a change of plans for the stock of the month. We'll probably be just continuing to just rebalance by the end of the year here. That is the goal. So that's what we'll do. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So before we do that, we will go in here and go into the day here. So today the portfolio closed out $7,287.13. We are down $135.84, down 1.83%. For the 1 week, we are up $1.82. up 0.03%. For the 1 month, we are down $214.28, down 2.86%. For the 3 months, we are down $42.58, down 0.58%. For the 1 year, we are up $940.59, up 14.82%. And for the all, we are up $952.95, up 15.04%. If we go down here, here's the cash account. There is $100 that's currently not available. That will be deposited in within 3 business days. As per usual, we put in $100 every single week on a regular investment plan. And there is $6.68 in the cash account currently. So as we continue to build this portfolio, we can see that if we go to Royal Bank of Canada, which is the stock of the month here, you can buy fractional shares on this, but if we go down to the section where it talks about the holdings, it holds almost about 20% of the portfolio. And that is just too much of a position for this size of portfolio for the amount of positions that we have. We have about 10 different positions in this portfolio. And I want to keep the portfolio at a pretty even number where it's around that 10%. And this is almost double. And so we are not going to be buying this stock this week here. We are going to switch it up and we'll head over to Track Your Dividends and I will obviously show you that. So if we head over to trackyourdividends.com, which anyone can use completely free, we go in here and you can see Royal Bank is holding 19.7% of the portfolio, which is at the bottom right here. Now our smallest position is actually Manulife Financial Corporation, which holds a measly 5.9%. And so what I'm going to do moving towards the end of the year here, my plan for the rest of the year is try to balance this as much as we can. So going into the new year of 2022, we can do a plan of attack, maybe look at opening new positions, maybe buffing up a few other positions, but moving in that direction. And so what we're going to do this Friday is we're going to start pumping money into this position here to increase the allocation of about 5.9 and try to get up to 10. Now, when I do that, what is going to happen is all these positions will drop down a little bit. And then as we get closer to that 10%, then we'll go to the next lowest position and increase that position so that it lowers the other positions. But we'll keep doing that until, we're at an even roughly about 10% per position, because I don't want to be too heavily invested in one company when it comes to this, because I love all these companies. Don't get me wrong. That is why I pick these stocks and I will hashtag hodl them till forever. But I'm just going to do that so that the portfolio balances at about 10% per position. And as we add new positions, like completely new positions, then we'll bring that one up and then we'll even it out again. Now that's not always the best strategy. And I know some people don't want to do that. They just want to go in one position. But then what's the point of owning these positions? Well, the point of owning these positions in my case is I'm building this portfolio not to have massive gains. I'm building this portfolio to build a steady stream of income when it comes to building a dividend portfolio. So if we head over to upcoming dividends, which is also another tab on here, you can see that the high months are every 3 quarters or every quarter in October, January, April, and July. And we come in at about $29 to $30, and you can see it just goes down from there, or you can see it as going up and then a middle one and so on and so forth. What I want to try to do is keep it consistent. Consistency is key, because if we have a consistent dividend coming in and we can predict, pretty much even amount, maybe off by maybe $1, $2, $10, or off by maybe 10%, that is good enough, where it's just in this area where we can predict it and we can make moves according to that. Because when you're getting a $9 a month dividend, you can't, it just might take a bit longer to reinvest it, the dividends. And so what I want to try and do is, keep these at a pretty close range, where every single month we can take those funds and start buying shares and keep it pretty even keel. So that's what we're looking to do in that sense. Sorry, I'm getting a bunch of messages at 10 at night, but that is what we're looking to do. The other thing is, I noticed when I was going through this, is Loblaws. There's some incorrect information. I don't know why that is, but it says Loblaws only pays a semi-annual dividend, but in fact, it does do a quarterly dividend. And I did double check the activity, and so we'll make sure to go through that. But that is what we're going to try and do here, is even out the dividend payments to come in a fair amount, if you know what I mean, like pretty close to every single month, be $30, $30, $30, $30, so on and so forth, and increase it incrementally at a time. And people might have different points of view on this, but that's just what I'm trying to do here, to create a consistent income, because we want it to be relatively the same. If you're going to be using this to build a certain lifestyle for yourself, you want to be able to have enough every single month so that you can maintain a certain lifestyle and have it continue to grow. But obviously, I'm so young still that I'm not looking to retire. I'm still looking to just pump money into the stock market, into investments, and so on and so forth. I'm still in the building phase of my life. And so that should make sense to some people. It might not make sense to other people. And I'm totally open to being wrong. And I'm totally open to hearing other people's strategies on that. And I'm not chasing a dividend. I am looking to create a certain lifestyle to have consistent dividends, so that I don't have to be worried if one month I overspend in the future, like the long-term future, where one month, you get a ton of dividends. The next month, it's kind of like half. And then the next month is like a third. And that's just not fun for me. And I'm just one of those people that just likes consistency in that aspect. Okay. And so there are some mistakes on here. There's some of the information on here is inaccurate, but Loblaws is one of those where it does pay a quarterly dividend, and some of these dates are a bit off. And so as you can see, there is the lowest of being $9 and the highest of being $31. I want to close that gap. Okay. Now, some people might think, oh, but I want to be heavy in this position. That is totally up to you. That is your style. And whatever you're searching for when it comes to investing and your goals are, that's what you want to build at. But this is our plan, my plan, till the new year. And so we'll head back to Wealthsimple Trade here. And I'll just go ahead and show you guys in the activity section when it comes to the dividends that I'm not pulling your leg on this one. Okay. And so Loblaws, as you can see, we'll go all the way back to when we started the portfolio. Loblaws on December 30th paid $1.01, and then we go up, and there's Loblaws again in April. So January, February, March, April, paid at the beginning of April, looks like. And then after that, you can see another one comes in on July. So January, February, March, April, and then July, all in 2021, I believe. Yes. And then again, if we go to the next one, most recent one was on October 1st, 2021. The interesting part is that their dividends are increasing over time as we go into those positions, as they increase their dividend payments. And so that's how you find that. Okay, so that is the plan. We want to diversify a bit more in the sense of asset allocation, where we are not putting too much in one position and kind of, spreading it out evenly to try and create a steady every single month, pretty close income to close the gap on these dividends. Because I just don't want to see a $31 month and then a $9 month. It's like seeing a 10 grand month and then a 4 grand month, which is not bad. I'm not complaining about that, but I just like consistency. I like to keep it close and keep the averages, well, the median, not the average, because averages are calculated different, median to be very, very close and not off by thousands and thousands of dollars when we get to, a retirement age and we don't have active income. Now we just have passive income. And I'm sure I'm going to learn a lot of things doing this from more experienced investors on this space, on this platform, that are going to make comments, and I'm open to learning about that. But as of right now, we're just going to do that for the rest of the year. So we'll look at the positions that we have and then just increase the positions that are not, maybe not getting enough TLC in that sense, where it's some tender love and care. And so we probably want to pay a bit more attention to those, because you never know. Right now it's so focused on the financial sector because they haven't been raising dividends because of OSFI or OSFI. And so Manulife will be the one to beef up that position. And then we'll probably look at the consumer staple, which is Loblaws. Okay. And so that's pretty much it for the video, guys. I'm totally open to suggestions. I guess I'm coming out to you guys to see if there's more experienced investors coming in and giving some feedback on that. I don't know everything. I'm just a guy on YouTube building a dividend portfolio right in front of your eyes. And so don't forget to like, subscribe, and turn your bell notifications on. They are completely optional, but they are completely free. And it really helps the channel out and just it creates, what it does, I think, is will create more, it'll attract more experienced investors to come on and watch and leave comments, and we can all learn from it. It's not just, I'm doing this just for the sake of doing it. I actually want to learn from those that are more experienced and look at having different perspectives, because it does help those that are watching the channel, because I'm not the only perspective out there, and I'm not the only channel out there that is doing something similar to this, or even just investing in general. So if you guys do that, it'd be very much appreciated. And again, have a great week, and we'll see you in the next one. Bye.